of Robert and Ann. They were referred by a friend who recently obtained a reverse mortgage. I asked them what prompted them to consider a reverse and to tell me a bit about their plans and goals for retirement. They'd like to make some modifications to the home so that they can age in place. After Robert's 2 back surgeries a year and a half ago, he knows that stairs may become a challenge for him down the road, and Anne would like to make some changes in the bathrooms. They've met with a CAPS, Certified Aging in Place Specialist, contractor, who gave them an estimate for the work they wanted, but with their mortgage payment of $1,150 per month, it's just not in the cards. Anne does not want to touch their retirement accounts. She considers that their safety net for any unforeseen health expenses down the road. They recently spoke with the friend who referred the CAPS contractor to them, and he explained that he paid for his home modifications with a reverse mortgage. Since Anne was reluctant to touch their investment accounts, Robert thought it sounded like a good idea to at least check it out. When they first called me, they had a lot of questions. We addressed their concerns one by one. Robert had heard that the bank owns the home, and Anne was concerned about leaving their son, who lives in Illinois, with a large debt at the end of the loan. I dispelled these myths and talked about the safeguards of the HECM reverse mortgage. I then focused the conversation on the fact that the modifications they wanted to make would continue to allow them to live in the home that they loved, and that with a reverse mortgage, the payments are optional. They agreed to let me collect some initial information, and I soon realized that Robert and Anne could pay off their current mortgage, resulting in increased cash flow, and allow them to pay for the home modifications they wanted. They expressed concern that their credit was not perfect since they incurred some medical bills after Robert's back surgery. I explained that a LISA, or life expectancy set-aside, might be an option to cover the property charges. This could all be accomplished without accessing the retirement accounts, which Anne had indicated were so important to her. She could even consider retiring completely if she wanted to, since the burden of a monthly mortgage payment would be gone. Mortgage is a non-recourse loan. That means that there is no personal liability beyond the value of the home at the time it is sold years from now, and no other assets are at risk. And of course, you want to mention borrowers are not asked to give up title to the home merely for taking out a reverse mortgage. So making these renovations and changes to the home is the most important thing right now. We also know that Anne was reluctant to touch their savings. So the line of credit provides a cushion should unexpected expenses arise.